Hello traders, in today's video we'll be looking at the correct way to determine directional bias in any market. Okay, so what is directional bias? It simply means the approach you are willing to take in the market, if you are to be a buyer or you are to be a seller for a given period. Note, I said a given period because your directional bias on a monthly chart or monthly time frame might be different from that of 4 hours. But I'm going to show you how to marry these time frames together so you can have a plan whereby you can simply take either a buy or a sell. And to understand directional bias, you need to understand impulse and correction. Okay, this is a bullish move, okay, and a bullish market. From this point to this point is called an impulse. The move is an impulse move, okay, for a bullish trend. The retracement there is called the corrective move or the correction. So price do not move in a straight line. Price move in what? Impulse and correction. Impulse and correction. Impulse and what? Correction. Impulse and correction. Impulse and correction. Okay, first of all, you need to understand this. Why should you understand this? Your impulse move will move from a point of demand or supply in this area, in this case from the point of demand into where a point of what? Supply. So when the price gets to the point of supply, you can anticipate a movement down, that the price will have to what? To correct. And where is it going to correct into? Yet another point of what? Demand. Okay, so all you need to do is to anticipate these demand and supply zones on your chart first. So when price is moving, like in this case, the price moved to break structure, you can confirm that you have a bullish move. You can decide to what? The directional bias could be bearish. If price gets to a supply zone here, your directional bias can be what? Bearish down to the demand zone. When it gets to the demand zone, your directional bias can be what? Bullish. Are you with me now? So you don't say, okay, today I want to be a buyer and simply maybe you are waiting for price to get there. You might not wait. You can trade this down and this could be your directional bias. Okay, it could be a sell. You can be a seller here and you can be a buyer here within the particular time frame. Okay, so now let's go to the chart and see what we are talking about here. Okay, before we head to the chart, let's look at it in a bearish scenario. Okay, bear with me please. In a bearish scenario, you have what? Impulse, correction, impulse, correction, impulse. Okay, this is the impulse leg, this is the correction. The correction is simply the retracement. Okay, this line here, this is correction. Okay, so all you need to do is, as I said, anticipate or determine the areas where you feel price will react from. Okay, demand zone here, demand zone here. Okay, impulse and correction. So when the price moves, it moves into a demand zone where the correction will start, and the correction will end at a particular point of what? Interest. It could be your favorite order block strategy, okay, to move this price further down. And when the price moves, it also reacts from what? A demand zone, retrace, create a corrective leg into what? A supply zone, which in this case could be your order block, other point of interest. I don't know why I keep referring to other blocks. Anyway, so let's go to the chart. Okay, let's go to the chart. So we are going to start from the monthly. Okay, it's more like you doing top-down analysis. Okay, if you can see from here, I don't need to go too far. From here, price took out liquidity and broke structure. Took out liquidity and what? And broke structure. So we can say this is the beginning of what? Of a bullish move. It moves from here to here, creating an impulse leg. Where did the impulse leg stop? It stopped at this hidden base here. The hidden base here. This is what? A supply zone. You will have anticipated this move to fill up this imbalance. Okay? There are imbalances here. When the break happens, you should anticipate that this imbalance will be filled. When price gets here, the corrective leg can start. Okay, then when price is here, you can decide to be what? A seller. Your directional buyers will become what? Sell. You sell to the downside. Where are you selling into? A demand zone. A demand zone. Okay. Then there was a break here. A break of structure here. Okay. And you're expecting price to do what? To clear this high. But quite unfortunately here, this demand supply zone held the price. So you can anticipate that this supply zone can decide to hold this price for a little while, straight back into what? Into what? A supply zone. This imbalance field can do to then take price what? Higher. To then take price higher. Yeah. So now, from the monthly, from what you've analyzed from the monthly, you are anticipating this demand zone to hold and then push price higher. So in the monthly, your directional bias is what? To buy. You be a buyer. Now once you do that, you can now move to your what? Weekly. And repeat the same process. Okay. This is the monthly zone, which also is the weekly what? Demand zone. If price move up here, where do you think price will stop? At least to take direction again. This hidden base, this supply zone. Price will move here. If we create a break of structure in the lower time frame, you are expecting price to move here to this point. So in the weekly now, in the weekly, your directional bias is also what? Bullish. Okay. You go to your daily. Also, you can see price is forming a little bit of a trend here, and the direction you are expecting price to go to is your what? First price we need to get to this daily hidden base. You can see what I'm saying. To know your directional bias, your point of interest will have a lot to play. Okay, price is reacting here, forming higher lows. You can see higher low here, higher low here. So definitely, where is price heading to? Price is heading to this place. So your directional bias here is also bullish. You understand? You go to your 4 hours also. To determine directional bias is easy. All you need to understand is to know your point of what? Interest. You can see here in the 4 hour, price did what? Took out liquidity, broke structure here, then traded into where? It looks like magic, but it's not. Traded into where? You can see this is the current play of Euro USD anyway. Traded into where? This supply zone. As price trade into this area, you can decide to be a seller. You don't need to wait to say, okay, let me wait for it to come. You can decide to be a seller because it's printing what? A corrective leg from year to year. What is it trading it into? All this area here, these are demand zones here. And when price trades into that area, it is going what? Up. Into where? So all you need to do is to look for your setup. Maybe price will come back in here before moving up, okay, to this demand zone. And that is how to determine your directional bias. If you have any question, leave it in the comment. I think I will stop here. I don't need to go down to the 1 hour to 15 minutes. It's still the same thing. So when price comes to your point of interest, you go to your lower time frame, maybe 15 minutes. Like in this case now, if I want to, since I know the market is what? Bullish in most of the time frame, I can wait for price to do what? To come into this zone here. When it comes into this zone, I can decide to what? Look for my trade. We have two zones here, okay. When it comes in here, I'll look for confirmation to take the trade higher. So in this case, I am bullish. Or if this zone do not hold, I'll wait for this zone. Price comes in here and do what? I'll look for a buy to take the price all the way up here, because I know that there's what? A supply zone here that needs to be targeted. Or price can decide to do what? To go to this supply zone here and it become what? Bearish. Your directional bias will be what? I'll be bearish. I want to be a seller here. When price gets in here, I'll look for confirmation to take price lower. So that is all about knowing directional bias. It's not complicated and it should not be complicated. Trading is simple only if you have your set of what? Rules to follow. The reason why traders struggle is because they don't have a plan, they don't have what? A rule, and they lack proper risk management. If you have any question, make sure you put it in the description, in the comment section below. Also, I have a Telegram channel where I release daily setups as I see the market print. I share it there, and I also share with you my thought, what I expect price to do, and which can be a good help for you. Also, I've started a one-on-one mentorship. If you are interested, join the Telegram group. From there you will have more details concerning the mentorship. On that note, this next video talks about the 5 rules you need to know or you need to have to trade smart money like the banks. Okay, bye.